But that started to change now because gold prices went up so much. Now people are shifting over and go, well, maybe I should buy platinum. It's cheaper.
Guys, I find it somewhat unique that precious metals are doing extremely well this year. Gold's up almost 31%, silver's up almost 26, platinum's up 35%. Joe, what's driving it? What's the investor psychology behind that?
Well, it is what's driving these things is two things in a way. But it matters too. Like platinum has some different factors involved, but gold and silver, for instance, let's take those first. That is driven by what I would call fear or uncertainty, or it is also the weak dollar. But the weak dollar is related to those things too. It's all kind of circular, you know. Why do you have a weak dollar? Well, there's lack of confidence, there's uncertainty about economic policy. There's all these things kind of swirling around potential change and so forth that the market's trying to adjust to. And that uncertainty is what people do when they are uncertain and when they're afraid, they go and they buy things like gold. And historically, we've seen also a flight to quality, like when we have, we had the Israeli Iran thing going on right now, which doesn't look like it's getting better, by the way, although the Iranians apparently are asking for a ceasefire and wanting to restart talks. So maybe the Israelis had a positive impact there. I'm not sure. A little motivation for them, but anyway, uncertainty like that is people look for safe places to go. When they don't know what's going to happen, they're afraid of what's going to happen. They go to the safe places. Traditionally, you see those things. The safe places have been the U.S. dollar and treasuries. Yes, gold too, but gold has been more of about monetary factors in the past, mostly. Not all the time, but most of the time. But again, those things are kind of related, like I said. So look, with gold and silver, you got a couple of things. That's the main thing here is the uncertainty around economic policy in the United States and some geopolitical concerns, I think. And gold is a natural safe haven. Silver is more of a speculative metal. I don't think it really has much in the way of monetary attraction at this point. Gold still does, and gold's being accumulated by pretty heavily by central banks. By the way, if you read my weekend piece, there's a correction that you need to you need to look at. I put that from up until 2022, from 2000, I think six or something like that to 2022, that they were 20 billion dollars or 20 tons of gold had been bought by central banks. That's 20 tons a month. I left out the a month thing, and it jumped from 20 to 80 a month. They've been accumulating a lot of gold is the point. A lot of that's been China, but a lot of it, it's been spread around to some of the emerging markets as well. So there's a lot of things going on there. Platinum is a little bit different story. Does have investment attraction, and we've seen that start to ramp up. People had kind of given up on platinum because it went nowhere for like, I don't know, 6 years, 7 years, whatever it was. So the investor side had been giving up basically. And you saw that if you look at the amount of platinum that was held in ETFs and so forth, and physical ETFs was declining. And so, but that started to change now because gold prices went up so much. Now people are shifting over and go, well, maybe I should buy platinum. It's cheaper. And so that has been part of the demand picture. And I think the other side is the supply side, where we've seen a supply deficit now for 3 years in a row. Well, this will be the third year in a row. And I think 6 of the last 8 years, platinum market's been in deficit. So inventories have been run down, and now you get this investment demand on top of the regular demand that you get for automobiles, for catalytic converters and so forth. And the supply demand equation just starts to look like higher prices, and it's up again today. So that's kind of what's going on. As for psychology, I would say, I hear a lot about gold these days, put it that way. I mean, a lot about gold. Everybody's talking about gold. Everybody's talking about how well it's done, how much it's up, and oh my gosh, I got to own gold. And that makes me go, yeah, I'm starting to get a little worried. Maybe it's gone too far. But if you think about it as uncertainty, the one thing I'm pretty sure of is that President Trump that's his modus operandi. That's how he negotiates. Everything with him is about uncertainty. He goes into these situations where he wants to negotiate, and he wants the other side off balance, right? He wants the other side to be unsure of what he's going to do. Well, the problem with that is that U.S. businesses are unsure too. But uncertainty is part of the equation, is my point. So I don't think that's going away. So anyway, I think the sentiment in gold in particular right now is pretty bullish. I would be very hesitant to be putting a lot of money to work in gold up here. Platinum is a different story, and palladium too, by the way. Although the equation on palladium is not as favorable as it is on platinum. So I would say that you know those things are just emerging. Platinum and palladium, those types of moves are just really emerging now. Whereas gold has been in a bull market for quite a while now and is really, really, you know, people are really kind of over the top on that. So I'd be a little careful with that one.
So, Steve, I want to go back to you with something that's just is slightly off the path here in this discussion about precious metals. But with countries accumulating um, and tons of gold, tell me, in your opinion, is there any possibility of a shift away from the dollar as reserve currency and moving back toward gold? Not necessarily to Bretton Woods, but I mean, gold is the second most acquired reserve now behind the dollar.
Yeah, that's a great question, and it's a little bit of a nuanced answer. Is the dollar losing market share? Yes, the dollar is losing market share. There is a move to, by central banks to hold more gold. You've got a lot of people, moving to crypto. Yeah, it's losing some share. Is there a potential to replace the dollar as the reserve currency that's kind of the back end of the financial system? No. Because what you're going to go to your car dealership and borrow in gold for your car, and that really scales up too. If you're large companies and you need to liquidly move money, you've got the treasury markets, you've got the entire Eurobank banking system. There's entire infrastructure built around the dollar. That just can't be replaced or replicated. So, the answer is just a little more nuanced than people on the internet or social media posts want you to think. But let's focus a little bit on the issue of losing some of that market share and the interest around gold. I wanted to pick up on that because it is increasingly seen as a safe haven, and I think Joe made a really interesting point on his newsletter. If folks haven't read it, they should read, subscribe to it if you haven't. There's my little plug. Uh, but we saw more of a move to gold here than to treasuries. And I think that's really interesting. It tells you some of the psychology. We also talked to the point that Joe was making about precious metals. Gold has really led the way here. It was really the first one to kind of go up, and we've been kind of thinking that this is a move that is going to have some legs to it. Kind of Joe points out the uncertainty here, which I would actually say I probably disagree with him. I would think it's actually a lot more uncertainty than what he thinks. I think, yeah, I think you get rid of Orange Man and you still, I mean, nobody's talking about, but how many days of race riots do we have in Northern Ireland? The political parties in the UK, the established parties, are getting really displaced by a newcomer to a degree in the polls. I've mentioned this before, AFD in Germany, you go around Europe, populism, France. You go to, Japan being back in the aircraft carrier business, the post-World War II order, really under pressure. Yeah, I think this goes way, way beyond an American president. I think he's just a symptom. It goes beyond third-party candidates in France and the UK and Germany. It goes beyond the Japanese revising the Constitution. It goes beyond China doing the biggest military buildup since Nazi Germany and Imperial Japan, while openly saying that pretty much every place it has territory with neighbors that it has claims, whether it's Vietnam or India or Taiwan. So I think this instability is here for a while, and that could drive precious metals. And then I think when you look at the U.S. currency and U.S. Treasuries, one of the reasons certainly for it not being as much of a safe haven, we've talked about this, is dollars overvalued. We think it could fall as much as 25% just to get to fair value. I think there's other issues you could look at with the dollar. I mean, we could talk about the downgrade and the credit rating. We could talk about other stuff, but let's just stick to it being overvalued in currency terms. And then I'm going to throw in crypto here too. I know it's making new highs, but if you look at the volatility pattern on crypto, when the market was down, crypto was going down. When the market went up, it went up more. But that's not really much of a safe haven for you. If a lot of times when people get worried about risk assets, it behaves like a risk asset and sells off. That kind of leaves you with precious metals. And gold's done well. We're seeing it broaden out to platinum. I have the same kind of issues with silver that Joe does. I look at it as more of a trading vehicle. I might date it, but I don't want to have a relationship with it. But for all those reasons, I think, yeah, this precious metal things could go for a while. There's a big reason we've now got platinum as well as gold in our portfolios. And I think there is a vol play, a risk play here, and I think it has legs.
So, Joe, I had another question I was going to ask you, but I've been watching your wheels turn as Steve was talking. I think I'd rather just have you respond to what he said.
Well, yeah, a couple of things. First of all, what I said in the newsletter is that President Trump does add a unique element to this puzzle, notwithstanding all the uncertainty and potential instability around the world. That's going to continue no matter who's president. You're absolutely right. But it might be nice if we could be stable. So, that's kind of the problem I'm talking about here. Maybe we shouldn't be blowing up the world trading system right now. Maybe we could be doing something else. Maybe we could be building a coalition to go against China and so forth. But no, we're gonna blow up the world trading system. So he does add a unique element there. That was my point.
Fair
Not,
point.
not that he was the cause of all the global instability. That's not what I'm talking about. So yeah, he's a uniquely adds a unique element of uncertainty there. Um, yeah, it's like I was thinking too, man. Listen, I don't know how these court cases are going to come out, but you think about this and think about, and I don't know that it really matters all that much which president, who would be president, but think about this. If now that he's kind of unbroken open Pandora's box here, if a president has the ability to use tariffs as a tool, no matter on what product, what country, at what level, he's got carte blanche to do whatever he wants with tariffs. I got to tell you, you think he's going to be able to resist that kind of power? I don't think Trump will. And I got to tell you, I don't think a lot of presidents will. That's kind of, I got to tell you, I hope at some point that Congress pulls back from this because we don't want not only the rest of President Trump's term, but the one after that too. And the one after that, I don't want presidents to have that kind of power. One person having that kind of power in the global economy is just way too much. So I hope that gets dialed back one way or the other, either via the courts or via Congress, one or the other. That needs to be dialed back because that's a big source of the uncertainty right there. Just the ability to wake up one morning and go, well, they ticked me off. I'm going to put tariffs on them, which seems to be kind of the plan here, if there is one. Um, Look, I think that there is a lot of instability in the world right now. There's a lot of things going on, a lot of changes going on, whether it's Ukraine and Russia or whether it's China, whether it's China and Taiwan. And by the way, I look at their accumulation of gold as a little bit differently. I think it's their preparation, part of their preparation for Taiwan. They're going to take Taiwan at some point. I think everybody kind of acknowledges that. And with Russia's experience with invading Ukraine and losing almost $300 billion in reserves because the West froze that, I think that other countries, certainly a country like China that knows that they may have some confrontation down the road, they want to be sure that they've got other reserves other than U.S. Treasuries, which is what the majority of their reserves have been. I think there may be other countries in that same boat, but I think that it's funny. That's the kind of thing where it's like it seems like the right thing to do, and it probably was the right thing to do to freeze those assets, those Russian assets. But you don't know what the unintended consequences are, and that's one of the things I think that is so hard about foreign policy, about economic policy, all these things. Unintended consequences come and bite you in the butt. But yeah, listen, China is accumulating a lot of gold. But even if they continue to accumulate at the rate they have, by the way, I don't know that they can accumulate enough to fully back the yuan with gold. Any type of gold backing for their currency would have to be a fractional reserve in a sense that they don't have enough gold to cover the whole thing. But listen, I will tell you this. I said this, and I'm going to say at least a decade ago, and I wrote it too at the time, and I'd have to go back and look for the thing and find the commentary. But I wrote a commentary once that was titled "First One to a Gold Standard Wins the Game," and I did that because it's a world of limited capital. It's always a world of limited capital to some degree, and countries need that capital. Where is the money going to go? Right now, the dollar has this extraordinary privilege. We get a lot of assets, a lot of capital is invested in the dollar for a variety of reasons, and we get kind of to free ride on that. But what if China suddenly backs the yuan with gold? Now the yuan may look more attractive. I'm not saying that's what's going to happen, but it certainly looks like, put it this way, culturally, the Chinese are much more likely to shift to a gold standard than we are. Culturally, India and China both have this cultural affinity for gold. So I don't know. It's interesting stuff. The central banks accumulating, I don't think that's really what's driving most of this. I think it's part of the puzzle. I think that the bigger puzzle here, or the bigger, part of this is individual investors. And by the way, I think that's the same thing with what's going on with the dollar and what's going on with non-US stocks. I think that if you go and look at the dollar's run up and the dollar's strength over the last few years, that's not from central banks. I think it's from individual investors. It's from, well, let me just qualify that, private investors. It's not central bank. It's not official flows. This is private capital coming to the U.S. And if it starts to go away, I think we have a bit of a problem in funding our economy. We need that capital. And so that's really what we're watching. And that's part of this puzzle with gold too, and gold and platinum and all these things. The dollar plays a big role here. So look, we said a long time ago now, it's been, I don't know, I guess, how long have we been talking about a weak dollar? I guess at least since the election. But we think we're in a weak dollar environment. We don't think that's going to change. You'll see the dollar rally at times, but I don't think you're going to get a big uptrend. I think we're going to stay in a downtrend. And these are the types of things you expect to see when you have a weak dollar. You see gold go up, you see commodities go up. That's what happens in a weak dollar environment. So none of this is a surprise. The question is, how do you position yourself and what's the timing? We kind of know what direction things are going to go, and if history holds. And so we just have to figure out the timing and the size of the positions and things like that. So look, none of this is surprising. It's what we expected, and we're trying to take advantage of it. So, um, sometimes we get lucky. I told you guys we bought that platinum position, and the thing immediately took off and made us 15%. That was kind of nice. But that was total luck. And there are other things coming, I think. Listen, the move in oil last week was obviously driven by Israel and Iran, but I don't think that's done. And I don't think that Israel and Iran is done, and I don't think the rise in oil is done either. So we may see some more commodities continuing to be in the focus, put it that way.
I got to tell you, it is fun watching the two of you as we go through this. Sometimes you're on a single shot, but I'm watching both of you at the same time. As Steve said, you're missing a lot if you haven't signed up for our newsletter. If you haven't, make sure you do that today.